Most of the biggest cap tech names held strong to close out the week, but the Chartmaster sees more pain ahead for the group. Let's get to the charts with Chartmaster Carter Worth of Worth Charting. Despite some of those big misses, Carter, NASDAQ closed the week positive. What do you see?
That's right. Thanks, Sarah. It was a curious week in the sense that it was basically bad news on the fundamental side for these companies, and yet the price action, it shook off the bad results. And so before we look at the charts, was it a good week or wasn't it for the NASDAQ 100? Well, the NASDAQ 100 was up 2% for the week, plus or minus. That's not bad. But the S&P was up 4%, and the Russell 2000 was up 6%. So net, it was not a good week for these names. And let's look at some charts and try to figure it out together. The first here is just the S&P 500. And what's key, of course, is we know that we breached the June low, and we've ricocheted back above that low. You can see the horizontal line. Now, the second chart is, it's a basket. It's the top 5 stocks plotted equal weight. Names everyone knows: Apple, Microsoft, Google, Amazon, and Tesla, representing about 20% of the S&P. And what we have here is we're right at the June low. So this group was holding up better. It didn't breach the way the S&P did. And yet, of late, the S&P is back above its June low, and this is sitting right on it. And I think that is the problem. 2 more charts just for fun. The first here of the 2 is a ratio chart. You're simply looking at the NASDAQ 100's relative performance to the S&P. And we have literally been tracking that uptrend line perfectly and bouncing to the penny, to the penny, to the penny, and we've breached that line to the downside. Hold that thought and then look at the same chart going all the way back to the .com era. And what we know is that only in the last 12 months was the NASDAQ 100 able to recoup all of its relative losses to the .com peak, only to what? Roll over and fail. I think you want to remain underweight this area of the market.
Carter Worth, thank you very much. We'll see you shortly on options action, which I can't wait for. Let's trade this. Guy, do you agree with that premise?
Yes, 100%, because he basically said the same thing if you go back and listen to him. He was bullish in the middle of June. He got bearish towards the beginning of August. That proved to be extraordinarily prescient, so I'm with him. This is a mirror image of what we saw. It's just happening faster. And I will say this since you brought it up. If this media thing doesn't work out, which, you know, you are a star, you would be an incredible, badass FX trader, Sarah Eisen.
Oh, well, thank you. I don't know about that. But thank you. I do love foreign exchange. Courtney, on tech, the charts, as Carter suggests, not buying it. What about you?
Yeah, I would agree there. I mean, we definitely own tech, but we're not overweighting it currently. I likely think it will continue to underperform here and be under pressure as we're still in a higher interest rate environment. Even as rates start to come down, they're not going down to the levels they were over the last few years. So I completely agree with this. I own it, but definitely not overweight.
I'd just say these ratios also, if you look at the semis to the NASDAQ, too, also underperforming. This is where you had leadership, and I think this is an important part. We keep talking about the dollar, by the way. Dollar's a rear-view mirror to me at this point. I think dollar's a tailwind. We know so much about what's been priced into the dollar. Yes, we're hearing about it from multinationals right now, but do you think the dollar's going up another 10% against all these other currencies?
10% is a big move, but I think it still could go up
20
because the U.S. is still in better shape than everybody else, and even if the Fed takes it down a notch, everyone else is going to take it down even more.
We could talk FX forever, so we probably should save that for another show.
Yes.